Okay, so for today's deep dive, we're cutting through, some of the noise around AI and finance.
Right. Lots of AI washing happening.
Exactly. We want to explore what the future of institutional infrastructure really looks like. We're talking way beyond just digitizing old processes.
And we've got a great guide for this. We're looking at Driss Temsamani's book, The Agentic Bank. It's quite ambitious.
I liked the dedication, actually. It's for people who see finance not just as it is, but as a platform for, well, he says, reimagination and inclusion.
It sets the tone.
Yeah.
And his core idea is pretty radical. The platform era. It's ending.
Ending. Okay, so what comes next?
We're moving from systems that just, support what we do to what he calls agentic systems. Think autonomous AI agents.
Autonomous. So they're not just tools anymore?
Not at all. They actively participate. They're like a whole new class of collaborators, as he puts it.
Okay, I think for a lot of listeners, AI agent might still sound a bit like fancy automation. If you're used to rules-based systems, how is this different? How do we picture moving from just following rules to actually pursuing outcomes?
Yeah, that's the absolute key distinction. An agent has capabilities that, until now, were really only human. They can perceive what's going on.
Perceive, like see the market.
See the data, the environment, yes. Then they can reason about it, understand the context, and then this is crucial act based on that reasoning.
Perceive, reason, act. Got it.
If you think about older tech, platforms were all about control, right? Humans steering the ship from a dashboard. Agents are different. They're designed for cognition, for thinking.
So let me see if I've got this. Automation follows preset rules. Traditional AI might analyze data and say, give you insights to inform your decision.
Right, it informs.
But an agent, its goal is the outcome itself. Like you could give it a target, improve liquidity in this corridor, and it would figure out how.
Exactly that. They actively pursue outcomes. And Temsamani argues this isn't just, a nice to have. He calls it an urgent imperative.
Urgent? Why now?
Well, think about how fast markets move. Volatility is up. The time lag between spotting something, a risk, an opportunity, and actually doing something about it. That gap has become a serious liability.
So waiting for a human to analyze a dashboard and then make a call is just too slow sometimes.
It can be. Institutions need more than systems and dashboards now. They need intelligent outcomes happening almost in real time.
Okay, this is where I think the example really helps bring it to life. Let's talk about Lisa.
Yes, the case study. Lisa, the fictional global head of liquidity. She's overseeing trillions in flows, multiple currencies, multiple jurisdictions, a massive job.
And her role changes fundamentally, doesn't it? She's not manually moving cash around or just watching alerts. It's described as orchestration.
Strategic orchestration, that's the word. And she does it using her agent mesh.
Agent mesh. Sounds interconnected.
It is. It's not just point-to-point API calls. A mesh implies shared understanding, negotiation between agents. Her key collaborators are a Treasury forecasting agent, a compliance sentinel watching the regulatory side, and a client intelligence orchestrator focused on client needs and flows. And they're all talking constantly.
Give us a feel for that. What does that look like in her day?
Okay, imagine this. Her Treasury agent flags an issue. It's a prioritized update. The funding cushion in, say, Argentina's tightened up unexpectedly.
Why?
Because the settlement delays upstream may be linked to an unforeseen market event or holiday in Brazil affecting flows.
Right, the knock-on effects.
Exactly. And here's where it gets interesting. The compliance sentinel doesn't just passively report the regulatory risk involved. It might dynamically adjust the risk parameters of the Treasury agent based on its interpretation of, say, new central bank guidance in real time.
Wow, okay, so the agents are adjusting to each other based on incoming data and rules?
Precisely. And that synthesized information doesn't just end up as an alert on Lisa's screen. The system proposes actual ranked actions.
Ranked actions, like here are 3 things you could do.
Yes. Option 1, shift collateral from account A to B. Option 2, execute this FX swap. And crucially, it comes with a transparent reasoning trail why it's suggesting this, and a confidence score.
A confidence score, like how sure the system is.
Exactly. It might say, we recommend option 1, and we're 92% confident this is the optimal move given current policy and market conditions.
And that reasoning trail you mentioned, that's key for trust, isn't it? You can see how it got there.
Absolutely. It might cite specific internal policies, external regulatory text, market data points. It's not a black box.
Yeah.
And this whole process, think about it. Normally, this would take hours.
Oh, easily. Calls between analysts, risk teams, compliance, maybe legal.
Right. Now it's compressed into minutes of decision-ready intelligence. Continuous alignment becomes possible.
Okay, but wait. That 92% confidence is good, but there's still an 8% gap, right? An uncertainty. Who actually owns the risk if the agent's suggestion doesn't pan out? Does the book get into the government side? Because that feels like the elephant in the room.
It absolutely does.
Mhm.
It's probably the biggest challenge for actually implementing this. Temsamani spends a lot of time on the need for new governance models. The idea is that human leaders like Lisa, their role shifts. They move from being the primary decision maker on every single action
To what?
to being the ultimate accountability officer. They own the outcome, the strategy, the oversight. Even if an agent helped formulate or execute the specific mechanism, they set the parameters, the ethics, the risk appetite.
So setting the rules of the road for the agents and taking responsibility for the results.
That's a good way to put it.
So bringing this together for you listening, what's the fundamental takeaway? It seems like intelligence isn't just a layer on top anymore. It's actually woven into the operational fabric.
That's it. Finance moves from being reactive, managing processes that have already happened, to this state of proactive, continuous orchestration, led by humans, but powered by these agent collaborators.
And connecting this back to resilience, there's a final thought from the book I found really interesting.
Yeah, the point about turbulence.
Exactly. It says in this Agentic Bank model, market turbulence or disruption isn't just seen as a threat or a sign of fragility, it's reframed.
It becomes a proving ground, a moment that actually reveals the capability, the intelligence, the responsiveness of the institution.
Instead of breaking the system, it shows how well the system works. That's quite a shift in perspective.
It really is. Something for you to definitely mull over. What happens when your systems aren't just tools, but collaborators tested by change?